Question 1. Topic: Comparative and contributory negligence in Colorado. Sarah is involved in an automobile accident with another driver. It was determined that Sarah was 40% responsible for the accident, while the other driver was 60% responsible. If Sarah suffered $10,000 in damages, what amount is she eligible to recover under Colorado's comparative negligence laws? A. $0. B. $4,000. C. $6,000. D. $10,000. Answer: C. $6,000. Explanation: in Colorado, a modified comparative negligence rule applies, which states that a party can recover damages as long as they are not found to be more than 50% at fault. Since Sarah is 40% at fault, less than 50%, she is eligible to recover damages reduced by her percentage of fault. Therefore, $10,000 x 1, 0.4 equals $1,000. If Sarah were 51% or more at fault, she would not be eligible for any recovery. This system encourages both parties to avoid negligence, ensuring that fault is accurately assigned and damages are fairly compensated. Question 2, scenario-based. Topic: Initial claims processing and documentation. David is an adjuster handling a property claim after a severe storm. The insured property sustained extensive roof damage, water intrusion, and damage to personal belongings. David's first step is to document and assess the extent of the damages. Based on Colorado's statutory requirements, what should David prioritize to ensure compliance and accurate claims processing? A. Estimate repair costs without inspecting the property. B. Conduct a thorough investigation with photographs and witness statements. C. Immediately deny the claim due to the severe damage. D. Advise the insured to replace all damaged property before inspection. Answer: B. Conduct a thorough investigation with photographs and witness statements. Explanation: under Colorado's statutory requirements, an adjuster must conduct a thorough investigation and document evidence properly to validate the claim. This includes taking photographs, collecting witness statements, and inspecting damages firsthand. Documentation is essential not only to assess damages accurately, but also to meet compliance standards, prevent future disputes, and potentially defend against any allegations of improper claims handling. Options A, C, and D would all undermine the accuracy and legitimacy of the claims process, as they do not follow due diligence or best practices in claims investigation. Question 3. Topic: Actual cash value ACV versus replacement cost value ACV. An adjuster is evaluating a claim for a roof that was damaged by hail. The roof is 15 years old and has a 25-year expected lifespan. The cost to replace the roof is $20,000. If the insurance policy pays based on the actual cash value ACV with depreciation factored in, how much will the adjuster likely approve for payment? A. $8,000. B. $10,000. C. $15,000. D. $20,000. Answer A. $8,000. Explanation: the actual cash value ACV considers depreciation to reflect the item's value at the time of loss, rather than its replacement cost. Since the roof has lost 15 out of its 25-year expected lifespan, it has depreciated by 60%. $20,000 x 1. 1520 equals $8,000. The adjuster would therefore approve $8,000 as it accurately represents the depreciated value under the ACV policy. Replacement cost value RCV would instead pay for the full replacement without considering depreciation, but here the ACV policy applies. Question 4. Topic: Liability and damages. In a liability claim, an insured is found responsible for accidentally injuring a visitor on their property. The visitor's medical bills amount to $15,000, but they are also claiming an additional $25,000 for pain and suffering. If the insured's liability policy only covers compensatory damages, how much is the insurer likely obligated to pay? A. $0. B. $15,000. C. $25,000. D. $40,000. Answer: B. $15,000. Explanation: compensatory damages include economic damages like medical bills, but generally exclude non-economic damages such as pain and suffering, unless otherwise specified in the policy. Therefore, under the policy that covers only compensatory economic damages, the insurer is obligated to pay the $15,000 in medical bills, not the additional $25,000 for pain and suffering. Question 5. Topic: Mandatory coverages in Colorado. Auto insurance in Colorado. Which of the following coverages must auto insurance policies include by law, unless rejected in writing by the insured? A. Collision coverage. B. Comprehensive coverage. C. Uninsured underinsured motorist coverage. D. Towing and labor costs. Answer: C. Uninsured underinsured motorist (UMUM) coverage. Explanation: Colorado law mandates that all auto insurance policies include uninsured underinsured motorist (UMUM) coverage unless it is explicitly rejected in writing by the insured. This coverage is designed to protect policyholders if they are injured in an accident caused by a driver who lacks sufficient insurance. Collision and comprehensive coverages, as well as towing and labor costs, are optional and not legally required. Question 6. Topic: Workers' compensation insurance in Colorado. An employee in Colorado is injured on the job due to equipment failure. Under Colorado workers' compensation laws, which of the following types of benefits is the injured employee eligible to receive? A. Punitive damages. B. Pain and suffering damages. C. Medical benefits and lost wages. D. Property damage compensation. Answer: C. Medical benefits and lost wages. Explanation: Colorado workers' compensation provides specific benefits to employees injured on the job, including medical benefits to cover treatment costs and wage replacement for lost income due to the injury. Pain and suffering or punitive damages are not included in workers' compensation claims. Workers' compensation aims to promptly address medical and financial needs rather than awarding damages typically available in personal injury lawsuits. Question 7. Scenario-based. Topic: Claims process and investigation. Tom is an adjuster investigating a claim where a fire caused damage to both the insured's home and a neighboring property. During his investigation, Tom discovers the fire may have started due to negligence on the insured's part. What should Tom do in accordance with Colorado's claims investigation guidelines? A. Approve the claim without further inquiry. B. Deny the claim immediately due to negligence. C. Document his findings and consult with the insurer about potential liability. D. Focus only on the insured's property, ignoring the neighboring property damage. Answer: C. Document his findings and consult with the insurer about potential liability. Explanation: According to Colorado's claims investigation standards, an adjuster must perform a thorough and unbiased investigation, including documenting findings and consulting with the insurer regarding any potential negligence or liability issues. Tom's responsibility includes considering how negligence may affect the claim and any third-party liability arising from the incident, such as damage to the neighboring property. Immediate denial or ignoring relevant evidence would violate standard claims handling practices. Question 8. Topic: Ethical conduct in claims handling. An adjuster is handling a claim where the insured is pressing for a quick resolution despite incomplete documentation. Which of the following actions best aligns with ethical practices in claims handling? A. Settle the claim quickly without reviewing full documentation. B. Provide partial payment based on the insured's assurances. C. Wait for all required documentation before making a decision. D. Deny the claim due to incomplete documentation. Answer: C. Wait for all required documentation before making a decision. Explanation: Ethical claims handling requires an adjuster to thoroughly review all necessary documentation before settling a claim. Proving or denying a claim without complete information would breach ethical standards and could lead to inaccurate or unfair claim outcomes. Option C ensures the adjuster complies with ethical guidelines, upholds the integrity of the claims process, and adheres to the duty of fair treatment. Question 9. Topic: Bad faith claims and legal recourse. Which of the following actions by an insurance adjuster could potentially lead to a bad faith claim against the insurer in Colorado? A. Thoroughly investigating the claim before making a decision. B. Denying a claim based on clear evidence of fraud. C. Offering a settlement significantly lower than what is owed without justification. D. Requesting additional documentation from the insured. Answer: C. Offering a settlement significantly lower than what is owed without justification. Explanation: In Colorado, bad faith claims arise when an insurer fails to act fairly or in good faith towards the insured. Offering a settlement far below the owed amount without valid reason can be considered bad faith, as it suggests the insurer is not providing the fair coverage promised in the policy. Actions like a thorough investigation or requesting reasonable documentation are part of standard practice and do not constitute bad faith. Question 10. Topic: Covered perils and exclusions. Homeowners insurance. An insured's home is damaged due to an earthquake and they submit a claim under their standard homeowners insurance policy. How is the insurer likely to handle this claim? A. Approve the claim and pay for full repairs. B. Deny the claim due to earthquake exclusion. C. Approve a partial payment for structural damage only. D. Offer coverage for contents damaged but not structural repairs. Answer: B. Deny the claim due to earthquake exclusion. Explanation: most standard homeowners insurance policies exclude coverage for earthquakes unless an endorsement is purchased for this peril. Earthquakes are considered a catastrophic event and thus require separate coverage, which must be added by the insured. Standard policies cover common perils like fire or theft, but generally exclude natural disasters such as earthquakes or floods without specific endorsements. Question 11. Topic: Business income and extra expense coverage. A business suffers a fire that leads to temporary closure and the owner files a claim under the business income and extra expense coverage in their policy. Which of the following expenses is most likely covered under this policy? A. Lost revenue during the closure period. B. Building repairs due to fire damage. C. Inventory replacement costs. D. Employee severance packages. Answer: A. Lost revenue during the closure period. Explanation: business income and extra expense coverage typically reimburses the insured for lost income during the period required to restore operations following a covered loss, as well as necessary extra expenses to resume normal operations. This coverage does not pay for the direct repair of the property itself handled under property coverage, nor does it cover inventory replacement or unrelated expenses like severance. Question 12. Topic: Determining negligence and legal liability in a liability claim. Which of the following conditions must generally be met for negligence to be established under Colorado law? A. The claimant must have experienced a monetary loss only. B. The defendant must have breached a legal duty owed to the claimant. C. The claimant's actions must have also contributed to the incident. D. There must be an existing written contract between the parties. Answer: B. The defendant must have breached a legal duty owed to the claimant. Explanation: to prove negligence in Colorado, it is essential to demonstrate that the defendant owed a duty to the claimant and that this duty was breached, resulting in harm. Contributory actions by the claimant may reduce the compensation. Comparative negligence, but do not alone establish negligence on the defendant's part. A written contract is not required for a negligence claim, as negligence is based on the breach of duty rather than contractual obligations. Question 13. Scenario-based. Topic: Catastrophic claims management. Sarah, an adjuster, is handling claims after a large hailstorm severely damaged properties across multiple neighborhoods. Policyholders are reporting a variety of damages, and the insurance company has allocated extra resources for claims processing. How should Sarah prioritize her response to best comply with Colorado's catastrophic claims management practices? A. Approve all claims with minimal documentation to speed up processing. B. Process each claim in the order received, regardless of severity. C. Prioritize claims where severe structural damage could result in further losses. D. Deny claims if any documentation is missing, regardless of the situation. Answer: C. Prioritize claims where severe structural damage could result in further losses. Explanation: Colorado's claims management practices for catastrophes recommend prioritizing claims that, if left unaddressed, could lead to additional losses or safety risks, especially in situations where structural integrity is compromised. Proving claims with inadequate documentation could lead to improper payments, while denying claims without assessing urgency violates prompt response expectations. Effective handling balances efficiency with thorough documentation and prioritizes severe or high-risk cases. Question 14. Topic: Colorado workers' compensation laws. Which of the following benefits is not typically covered under Colorado workers' compensation laws? A. Temporary total disability TED benefits. B. Permanent partial disability PPD benefits. C. Legal fees for filing a workers' compensation claim. D. Vocational rehabilitation. Answer: C. Legal fees for filing a workers' compensation claim. Explanation: Colorado workers' compensation provides medical disability and vocational rehabilitation benefits to injured employees, but does not typically cover legal fees incurred by the employee for filing a claim. The intention of workers' compensation is to reduce litigation costs, hence the exclusion of legal fees. Temporary and permanent disability payments as well as vocational rehabilitation are designed to aid the injured worker's recovery and ability to work again. Question 15. Topic: Fraud detection and red flag indicators. An adjuster receives a claim for a high-value property loss after a sudden flood. Which of the following could be a red flag indicator for potential fraud? A. The property was underinsured. B. The claim was filed promptly after the loss. C. There is evidence of recent financial difficulties for the insured. D. The insured has a good claim history. Answer: C. There is evidence of recent financial difficulties for the insured. Explanation: Financial difficulties may create motivation for fraudulent claims, as the insured may attempt to obtain funds quickly. Prompt reporting and a good claims history are generally seen as signs of legitimacy, while underinsurance alone does not suggest fraud. Red flags are indicators of potential issues that require further investigation, and financial challenges can be a key factor in assessing fraud risk. Question 16. Topic: Subrogation and salvage. Which of the following best describes the purpose of subrogation in insurance claims? A. It allows the insurer to waive the insured's deductible. B. It enables the insurer to recoup losses by pursuing a third party responsible for the damage. C. It provides the insured with extra funds to cover uninsured damages. D. It prevents the insurer from selling any damaged property after payout. Answer: B. It enables the insurer to recoup losses by pursuing a third party responsible for the damage. Explanation: Subrogation is the legal right of an insurer to recover costs from a third party that is legally responsible for a claim paid by the insurer. This helps reduce overall claim costs and ideally can restore the insured's deductible or out-of-pocket costs. It does not involve waiving deductibles, providing extra funds, or restricting salvage rights. These aspects are handled separately within the insurance process. Question 17. Topic: Adjuster responsibilities and duties in claim processing. An adjuster receives documentation of a claim but notices significant inconsistencies between the damage described and the photos provided. Which of the following should the adjuster do to fulfill their duty? A. Deny the claim due to the inconsistencies. B. Approve the claim based on the written statement. C. Conduct further investigation to resolve the inconsistencies. D. Ignore the inconsistencies as irrelevant to the processing. Answer: C. Conduct further investigation to resolve the inconsistencies. Explanation: An adjuster has a duty to conduct a thorough and fair investigation of all claims. When inconsistencies arise, further investigation ensures that claims are paid accurately and that no fraudulent or mistaken claims proceed unchecked. Denying or ignoring inconsistencies without investigation may lead to unfair outcomes or legal issues. The adjuster's responsibility includes validating all evidence before finalizing a decision. Question 18. Topic: Comparative and contributory negligence in Colorado. In a Colorado liability claim, the claimant is found to be 40% responsible for the accident. How will this impact the damages they receive? A. The claimant receives full damages as Colorado does not consider comparative negligence. B. The claimant will receive 60% of the awarded damages. C. The claimant will receive no damages due to their partial fault. D. The claimant will receive full damages, reduced by the amount covered by their insurance. Answer: B. The claimant will receive 60% of the awarded damages. Explanation: Colorado follows a modified comparative negligence rule, which means that claimant can recover damages as long as they are not more than 50% at fault. If the claimant is found 40% responsible, they will receive 60% of the damages awarded. This rule ensures that each party's liability is accurately reflected in the compensation received. Question 19. Topic: Digital estimation tools and use of drones for damage assessment. Which of the following is a key benefit of using drones in property damage assessments? A. Increased likelihood of insurance fraud. B. Reduced need for adjuster site visits. C. Decreased accuracy in damage estimation. D. Higher costs for the insurance company. Answer: B. Reduced need for adjuster site visits. Explanation: Drones allow adjusters to inspect and document damage from a remote location, which could save time and reduce the need for physical site visits, especially in difficult to access or hazardous areas. This practice increases efficiency, can improve safety, and lowers costs while enhancing the accuracy of assessments through detailed aerial imagery. Fraud likelihood does not increase with drone use, and drones generally reduce rather than increase insurance costs. Question 20. Topic: Ethics and professional conduct. If an adjuster is offered a gift by an insured in gratitude for quickly settling their claim, what is the most ethical response? A. Accept the gift if it does not exceed $50. B. Politely decline the gift to maintain impartiality. C. Accept the gift but document it in the claim file. D. Accept only if the insured insists. Answer: B. Politely decline the gift to maintain impartiality. Explanation: maintaining ethical standards requires that adjusters avoid conflicts of interest and uphold impartiality. Accepting gifts, regardless of value, can create perceptions of favoritism and undermine professional integrity. Declining the gift demonstrates the adjuster's commitment to ethical conduct and objective claims handling, aligning with Colorado's standards for adjusters. Question 21. Topic: Property insurance and ordinance or law coverage. An insured property owner discovers that local building codes have changed and repairs after a fire will require significant upgrades to meet the new standards. Which of the following coverages would best address these additional costs? A. Extended replacement cost coverage. B. Ordinance or law coverage. C. Agreed value coverage. D. Actual cash value coverage. Answer: B. Ordinance or law coverage. Explanation: ordinance or law coverage provides protection for costs associated with complying with updated building codes or ordinances that require a property to be modified or rebuilt to a higher standard. Extended replacement cost and agreed value typically relate to rebuilding cost limits, while actual cash value considers depreciation and does not cover code upgrades. Question 22. Topic: Insurance contract principles. Utmost good faith. Which of the following is not an example of the principle of utmost good faith in insurance contracts? A. The insured provides accurate information when applying for coverage. B. The insurer pays claims promptly and fairly. C. The insured lists a secondary driver without the intent to file a claim. D. The insurer clearly explains the policy's exclusions. Answer: C. The insured lists a secondary driver without the intent to file a claim. Explanation: utmost good faith requires honesty from both parties. Listing a secondary driver without intention of filing a claim could indicate potential misrepresentation, which violates this principle. Insurers and insureds are expected to fully disclose and handle information accurately and transparently. Question 23. Topic: Liability insurance. Medical payments to others. A guest slips on a homeowner's icy driveway and suffers a minor injury. Under the homeowner's liability policy, which coverage would likely pay for the guest's medical bills regardless of fault? A. Personal liability coverage. B. Medical payments to others coverage. C. Dwelling coverage. D. Personal property coverage. Answer: B. Medical payments to others coverage. Explanation: medical payments to others coverage covers medical expenses for individuals injured on the insured's property regardless of fault. It is designed to cover minor injuries quickly and efficiently, avoiding legal complications. Personal liability would apply if the insured were legally liable, while dwelling and personal property coverage relate to physical property damage. Question 24. Topic: Colorado adjuster licensing requirements. In Colorado, what is a requirement for a person to become a licensed insurance adjuster? A. It must pass a state-administered ethics exam only. B. It must complete a specified number of pre-licensing education hours. C. It must meet a minimum number of years in the insurance industry. D. It must be sponsored by an insurance company. Answer: B. Must complete a specified number of pre-licensing education hours. Explanation: Colorado requires adjuster candidates to complete a certain number of pre-licensing education hours depending on the specific line of adjusting they intend to pursue. There is no state-administered ethics exam for adjusters in Colorado, nor is there a requirement for prior insurance experience or company sponsorship. Question 25. Topic: Flood insurance and FEMA. Which federal organization is primarily responsible for the management of flood insurance programs in the United States? A. Federal Deposit Insurance Corporation, FDIC. B. Federal Emergency Management Agency, FEMA. C. National Flood Insurance Program, NFIP. D. Small Business Administration, SBA. Answer: B. Federal Emergency Management Agency, FEMA. Explanation: the Federal Emergency Management Agency, FEMA, oversees the National Flood Insurance Program, NFIP, providing flood insurance and promoting floodplain management to reduce the impact of future flood risks. NFIP is part of FEMA's initiative, but FEMA itself is responsible for administration. Question 26. Topic: Inland marine insurance. Inland marine insurance is designed to cover which of the following types of property? A. boats and other watercrafts. B. Property transported over land. C. Dwellings and other real property. D. Manufacturing equipment. Answer: B. Property transported over land. Explanation: inland marine insurance covers movable property transported over land like goods in transit, contractors' equipment, or fine art. It does not cover dwellings or real estate covered under property insurance or watercraft typically covered by ocean marine policies. Question 27. Topic: deductibles and insurance claims. An insured has a $1,000 deductible on their property insurance policy and experiences a covered loss valued at $8,000. How much will the insurance company pay for this claim? A. $8,000. B. $7,000. C. $1,000. D. $0. Answer: B. $7,000. Explanation: the deductible is the portion of the loss the insured must cover before the insurance company pays. With an $8,000 loss and a $1,000 deductible, the insurance company will pay $7,000. Deductibles help reduce the insurer's risk by sharing a portion of the cost with the insured. Question 20. Topic: claim settlement and depreciation. A policyholder files a claim for a 10-year-old roof that has been damaged in a storm. The replacement cost of a new roof is $10,000, but due to depreciation, the actual cash value is calculated at $6,000. Which amount is the insurer most likely to pay if the policy is an actual cash value (SEV) policy? A. $10,000. B. $6,000. C. $4,000. D. The policyholder will not receive any payment. Answer: B. $6,000. Explanation: under an actual cash value (SEV) policy, the insurer pays for the depreciated value of the damaged property. In this case, the depreciated SEV is $6,000, which reflects the wear and tear of the 10-year-old roof. Replacement cost policies, by contrast, would cover the full $10,000 replacement cost without accounting for depreciation. Question 29. Topic: subrogation and insurer rights. In subrogation, which party typically reimburses the insurer after a claim payment if a third party is responsible for the damage? A. The insured party. B. The policyholder's employer. C. The responsible third party. D. The policyholder's relative. Answer: C. The responsible third party. Explanation: subrogation allows the insurer to recover claim costs from a third party responsible for the damage. Once the insurer compensates the insured, they gain the right to step into the shoes of the insured and pursue the liable third party to recover losses. Question 30. Topic: replacement cost coverage. A homeowner's insurance policy includes replacement cost coverage. If the policyholder's damaged property is covered under this provision, which of the following statements best describes the reimbursement they will receive? A. The actual cash value of the property adjusted for depreciation. B. The market value of the property. C. The cost to replace the property with similar new items. D. The original purchase price of the property. Answer: C. The cost to replace the property with similar new items. Explanation: replacement cost coverage reimburses the insured for the cost to replace damage to a lost property with new items of similar quality and type without accounting for depreciation. Actual cash value (SEV) policies, on the other hand, factor in depreciation, which results in a low payout.